Decio Nascimento is with us, Chief Investment Officer of Richmond Global Compass Capital, who, as Steve pointed out, happens to be Brazilian. Very good morning. Nice to have you with us.
Good morning. Thank you.
You know what? Emerging markets have been a real conundrum, I think, through 2019. People got excited about the fact the US was doing well and thought it's a good time to pile in on the back in the major economies, and it hasn't really delivered that strategy for 2019. What about 2020?
Yeah, I think 2020 we have more space for emerging markets, especially if you're looking at the idiosyncrasies of each emerging market. I'm Brazilian and I can talk a little bit about Brazil. I normally do not like Brazil, don't buy Brazil, but Brazil looks like it's finally going to work. There's argument about the social policies of the president, but the economic policies of the president are working the right direction. Brazil is an economy that's fantastic and just needed a few tweaks to make it work. It's a very closed economy. That's something the president is addressing. And there's a lot of problems with logistics. And the state is still a very big part of the economy. So as soon as the state starts stepping out, you start unleashing all of that growth that Brazil has the potential to achieve.
Now, when you compare the performance of Latin America, let's say, you know, south of Mexico, compared to what happened in ASEAN and in Asia from a structural perspective, infrastructure investment, trade, diversity of economy, etc. Where do you see the journey? Do you see really a structural change? Of course, Brazil right now has a pretty kind of liberal orthodox economic policy because the responsible minister is not a populist, but he's a technocrat in a good sense. But can that carry really through? We had always the kind of hopes and then the disappointment of hopes.
Yeah, so Brazil is known as the country of the future, and they say it's the country of the future and it always will be. But it looks like this time it is tweaking the right levers to make it work. So if you think about the model in Asia, it's very different than the model in Latin America. Brazil's not quite there yet, right? It didn't make as much investments in education, but it is moving, it is unleashing slowly the levers that have been holding the country back for many years, including the logistics part and the footprint of the government.
Is it already in the price? I mean, we've spoken in the past about positioning being fairly key for the Brazilian market. A hotel for hedge funds at one point, many years ago, and then we quickly saw the money move out of Brazil, and I think it was one of the worst trades for many hedge fund managers in many decades.
Yes.
So what's the positioning now like in 2020?
Yeah, so I think that's why we say Brazilians tend to be very bearish Brazil, because we understood the idiosyncrasies of the country and the problems with the institutions when foreign investors tend to be much more optimistic at emerging market in general and then not discriminate as much between them. So I think that's the main difference. I think is understanding that there's the measures they're slowly improving in terms of the fiscal balance, and the measures they're improving slowly in terms of institutions and the footprint of the government, which is the big difference in the past 20 years.
I'm sorry. Can I just very quickly, hedge fund hotel. Brazil is one of those countries which has been very often called the hedge fund hotel. And my problem is not investors, it's the fast money. The fast money goes in, the fast money takes valuations to crazy world. What are you laughing at?
Karen just said that.
You did? Did you really?
Yes.
I was looking at Saudi Aramco report that Christian Malek's going to do next.
I thought you could do two things at once.
Yeah, I can. Yeah, I was
Only
actually
you
doing
can do
three.
that,
I was
Karen,
doing a text as well. But why is Brazil's economy better than Argentina's then? I'm just tweaking the question here. why couldn't, I mean, for instance, because of course the hedge fund hotel, dare I say it, has exhibited many things, but patience and longevity are not two of those.
Yeah. Well, I mean, Brazil is very different than Argentina, especially if you ask a Brazilian.
Great countries, you know?
Good call.
But I mean, I think you got to keep in mind that Argentina has been dealing with that problem that Brazil doesn't have, and now having to deal with a shock on the election part. So I think they're very different countries in many respects.
Do you want to master a hedge fund hotel?
No.
Argentina, Brazil.
No,
Yes.
that was my question, and of course I agree, but the same answer you get when you ask an Argentinian, of course.
Yeah.
But my question is Mercosur and the relationship to the EU. I mean, that's pretty important, but now given that Brazil moves a bit into, you know, textbook economic policies, that's one thing. But Argentina goes, unfortunately, again into the other direction of spending, debt, populism. So the tension as a result in Mercosur and the relationship to the EU, do you see really fault lines going up here, or will it hold?
If the blocks will hold?
Yes.
Is that a question?
The trade relationship within Mercosur and the relationship to the EU.
That's a great question. I can say that I wish it did, but I'm not sure. I mean, we do see this global trend of deglobalization and countries going their own way. So at some point, Latin America, we're always a few years delayed, so it might be a benefit at this point, but I am not sure.
Just a quick one from me. We've talked a lot about Brazil and Latin America. Just as we wrap it up and let you go, just give us your wish list then for 2020 in terms of emerging market countries you think will do well, places that we should encourage our audience to take a look at.
Yeah, I mean, I like Brazil, like we've been talking for a little bit now, and I like local markets in China. We talked about the numbers this morning. I was watching you from the hotel, and it looks like, well, China, it is at a lower
It's
pace.
different in the flesh from the hotel. I always wonder whether TV puts weight on it.
Thinner.
I just wonder. Anyway, sorry, you're answering. You're watching him in the hotel. Go on.
Yeah, I mean, I think the idea that China has been growing slower, it is something that people have been expecting, and it's somewhat priced in. But the fact that the components of the GDP surprised on the upside is very good for local markets, and it showed that the local policies that have been put in place 6 months ago now are starting to show up in the numbers.
Terrific. Great having you in. Thanks very much. And increasing the audience by 1 this morning. That's very useful for the marketing people. Decio, good to see you. Decio Nascimento, Chief Investment Officer at Richmond Global Compass Capital.